Welcome back, everybody. Sive is here with the Forex Peace Army.com. Let's keep up with the analysis of the euro currency. In general, we could say that we're smart guys yesterday. So we have discussed the possible drop, and it doesn't matter absolutely that we couldn't know the reasons for this possible drop. So anyway, price action was weak, and we yesterday said that it's probably there will be some pullback from the 1670 area. So currently, a situation stands so that recent volatility, the impulse that had been given by the Jerome Powell, has shaken market a bit, and the rest of this momentum probably will keep moving the markets in today's session. So market needs to come down a bit. And currently, on the performance on the intraday charts on the daily, it is not quite clear whether the market will be able to stay above this support area, or it still will break it down. So for the bulls, it is vital to see that market stands somewhere above this level. It will keep chance on a possible greater upward direction, and maybe scrubber still will be able to work. But at the same time, overall price action looks so that we do not have a lot of signals for position taking now, and overall price action recently looks really weak, which is actually absolutely doesn't encourage to consider new longs right now in this point. So in fact, yes, the Jerome Powell said only two major things. First is quantitative tightening will be closed in December, and the second, which is actually has triggered this downside reaction, he said that the 25 basis point cut in December is not granted. So although market mostly has priced in already this possible rate cut. Yes, it might be just verbal intervention, but it is understandable when you do not have a lot of statistics to see what's really going on. And he can't say anything different. So the major actually message that he sent is that's actually the Fed intends to keep going with the data and following the data. So that and towards what has happened. Despite this significant action, we haven't got any bullish scrubbers, which actually could be formed here, but I have checked on the futures chart on the spot market, unfortunately, or maybe for the bearish it is fortunately. With this candle, we haven't got any new grubber. So at the same time, the ability to form this butterfly is becoming more reasonable with this recent collapse. Yes, nominal trend remains bullish. This market keep chances on upward direction here as well. This grubber is also still valid. But the price performance on intraday charts, well, makes me wait and see what will happen, because I do not see any available setup scenario on intraday charts that let us to take position immediately. On the 4-time frame chart, there are a few interesting moments. First of all, yesterday we already said that an ability of the market to reach even minor target, and very slow upward direction. This is the harbinger of the possible collapse. And actually, this was triggered by the Fed. And market almost, by some case, these lows just stands above the C points. Nominally, this ABCD pattern is still valid, but it's very close to the total erasing. So, as you understand, this is, well, this type of action is not quite typical for the bullish market. When the market not only can't reach the minimum extension, but also it almost erased the overall ABCD shape to the upside. We could suggest that maybe a butterfly here will be formed or something, but to tell us definitely, we have to be sure that market here is forming something bullish. So that's some preparation for a possible reversal. At the same time, if you take a look, for example, on Great British Pound, here market stands very close to the weekly target of the ABCD pattern. So if I will just delete it, it's not needed anymore. This widening triangle has been broken down, and market stands very close to the weekly ABCD OP target in agreement with the 3150 support, 3140. As probably market will try to complete it. Maybe it will have limited impact on the performance of the euro, but probably it also might be some kind of the holding factor. If it will not press it down, but at least it could keep it on the sideways. So that's just common thoughts on the current situation. On the hourly chart, potentially, I wouldn't exclude even the ability of this local butterfly performance with the target in 50-50. So on daily chart, we have the 1490 target of the big butterfly, but here is another one might be formed, because here we have very strong downside action. In fact, market has dropped and come kind of the XOP target with this minor ABC, so it's almost vertical collapse just in 1 hour. This market now is reestablishing some upward action, but this momentum still exists, and that's what I was talking about in the beginning of the video, that this momentum probably will rule the market for 1 to 2 sessions more. So market needs to fade the fluctuations a bit, and then it could well, set the next direction more clearly. Hopefully we will get this in today, tomorrow session, but maybe it will last until the next week. So as a bottom line, currently, as you could see, we could suggest some patterns, but all of them are not confirmed. If you would like to trade it, you will trade it right now, just as they stand. That brings a lot of risk, so because they are not certain yet. What is definitely could be said that in the current performance, it's very difficult to find reasons to take the long position right now, immediately. So market looks a bit slightly more bearish rather than bullish. But overall conclusion stands that we need to wait a bit and see what clarity, for some clarity, and see what the market will show us. Because currently it seems some kind of the indecision action stands, and previously formed bullish patterns are still valid, but market doesn't follow them. At the same time, it doesn't show enough power to show more or less significant downside breakout. And in the current circumstances, it is well, not enough background for position taken. So that's probably all that we could say currently. Let's see for the progress what will happen, and as usual, return back to this subject tomorrow.